Welcome to the Full Tracy Monday Order Commentary. This is Owen Tracy recording. It's 3:42 p.m. That is Central Time. Today is April 30th. Well, I thought we'd kick off today, and certainly there's plenty to think about, but I thought we'd kick off with this graphic, which depicts the Fed put. So it highlights the fact that the Fed is more likely to cut interest rates if the ISM is below 50 and if PCE inflation is less than 2.5% and unemployment rate is higher than about 4.5%. We're pretty close on all counts. So the ISM is at about 49. The PCE is still a bit higher than 2.5%, but not much. And then the unemployment rate is about 4.1. So there's certainly the potential that if there's an economic contraction, that we're going to see a material change and that the Federal Reserve might be encouraged to cut interest rates. Now, of course, that has to back up against the potential that maybe the unemployment rate goes up and PCE goes up, and then they would have a stagflationary environment to deal with. Then, of course, we had earnings today, and Microsoft came in better than expected. They made about $1 billion more than expected, and they are also anticipating that they're going to spend about $80 billion on infrastructure in fiscal 2025. So that's pretty much on par with how much they said they were going to spend for fiscal 2024. And that is certainly a significant chunk of cash. Well, considering that they have about 70 billion on their balance sheet, it also implies that they'll be deploying free cash flow into that spending as well as potentially borrowing some money. Now, then we had Meta, and Meta also came through with stronger earnings. So that's on the back of resilient advertising revenue, and they're also anticipating that they will spend significantly on building out their infrastructure for artificial intelligence. So that's certainly beneficial. What we've also seen in here today is that oil prices continue to decline, that gold was pretty steady, silver was in negative territory but well off the lows, then copper pulled back very sharply. We had Glencore's earnings come out earlier on in the day where they anticipate they will not make as much money from trading in the next year that they have over the last 3 years. But of course, there's then the possibility that increased volatility in commodities will provide them with the kind of trading opportunities that would boost their profits. So the share is off the lows in here today, but it will have to follow through on the